Take a moment right now and think about your bank account. Payday hits, and you tell yourself, this month I'll actually save something. But then rent, the car payment, insurance, groceries, student loans, and all those small subscriptions quietly drain your balance until you're checking your account before every single purchase by the last week of the month. If this sounds familiar, trust me, millions of Americans live this exact same story every single month. Some make $45,000 a year, some make $120,000, but by the end of the month, the stress on their face looks almost identical. Here's the truth, the problem is rarely how much you earn. The real problem is that most people have no clear direction for their money. We're taught in school, get good grades, get a good degree, land a good job, but almost nobody teaches us what to do once the money actually starts coming in. Earning money is a skill, but putting that money to work for you is an even bigger skill. Imagine driving to a new city with no GPS. Would just driving faster get you there? Probably not. Speed is your velocity, but direction is what actually gets you to your destination. The same rule applies to money. Earning more is your speed, but financial goals are your direction. We're going to talk about 10 financial goals that, if you complete them before turning 40, won't just change your bank balance, they'll change your entire future. And this journey starts with the goal most people think is the smallest, when in reality, it's the foundation of your entire financial house. Picture this. Tonight, you get an email that says, "You've been laid off." Or a family member suddenly gets sick and the ER bill lands in the thousands. In moments like this, the real question isn't, why did this happen? It's, was I prepared for this? That's where the first goal begins, your emergency fund. Most people think of this as just savings, but the truth is, it's not money, it's peace of mind. Imagine two people, both earning $5,000 a month. One has $300 in their account, the other has 6 months of expenses set aside. If both lose their jobs tomorrow, who makes the better decision? The person panicking about next week's rent or the person who actually has time to find the right job? That's why you need at least 3 to 6 months of essential expenses sitting in a high-yield savings account. If you're a freelancer or your income is unpredictable, aim for a 9 to 12-month cushion instead. Once your security's in place, the next step is something very few people actually track, but every successful investor checks it regularly. If I asked you how rich you are, you'd probably tell me your salary, but your income doesn't show your wealth. Your assets minus your liabilities, that's your net worth, and that's goal number 2. Picture someone earning $120,000 a year, but drowning in a mortgage, car loan, and credit card debt. Now picture someone earning just $55,000 a year with zero debt, some investments, and a solid emergency fund. Who's actually financially stronger? This is exactly why smart people track their net worth, not just their salary. Every 6 months, sit down and calculate your assets, your debts, and your net worth. Slowly, your mindset shifts from how do I earn more to how do I build more. Now let's say you've built your emergency fund and started tracking your net worth. Is the journey done? Not even close. The real game starts now, because saving is one skill, but consistently growing your money is a much bigger one. That brings us to goal number 3, investing at least 20 to 30% of your income every single month. No excuses. People who only save end up fighting inflation their whole life. People who invest consistently make time their biggest ally. Pay yourself first. The moment your paycheck lands, investing comes before anything else. But there's one massive roadblock on this journey: high-interest debt. Imagine trying to fill a bucket with a giant hole in the bottom. No matter how much water you pour in, that bucket never fills up. That's exactly what happens when you're investing with one hand while paying 20-25% APR on credit card debt with the other. This is goal number 4. Complete freedom from high-interest debt. Not all debt is bad. Student loans or a mortgage can build assets over time, but credit card debt and payday loans quietly eat away at your progress. If your investments are earning 10% and your credit card is charging you 24%, you're actually losing ground. Pay off the debt that's hurting you the most first. Now imagine you've got savings, you're investing, and high-interest debt is gone. Is financial freedom complete? Not yet, because if your entire income depends on one job, your security is still incomplete. This brings us to goal number 5, building at least one income source that makes money while you sleep, aka passive income. Ask yourself, if you couldn't work for the next 3 months, would money still land in your account? If the answer is no, your income depends entirely on your presence. For some people, that's dividend stocks. For others, it's a rental property, a digital product, a YouTube channel, or an online course. In the beginning, the amount is small, but what matters is the habit. The day money hits your account for work you didn't do that month, your mindset starts shifting from employee to investor. Now let's talk about protection. You spent years building wealth, but one illness, one accident, or one bad decision can wipe out years of progress in months. That's goal number 6, insurance protection. Medical bills are one of the top causes of bankruptcy in America. Picture a family living normally, and suddenly someone gets seriously ill and the hospital bill hits 5 figures. Without proper health insurance and without term life insurance if you'd have dependents, your savings go first, then your investments, then you're forced into debt. Never think of insurance as an expense. It's the wall that protects everything else you've built. Once your security is solid, goal number 7 kicks in. Retirement. Most people connect retirement to age 65, but real retirement is the day you work because you want to, not because you have to pay bills. In America, your biggest tool here is your 401k and Roth IRA. If your employer offers a match and you're not taking it, you're literally leaving free money on the table. Picture 2 friends earning the same salary. One starts investing in their 401k at 25. The other says, "I've got plenty of time," and waits 10 years. By the time the second friend starts, the first isn't just ahead in money, they've locked in the power of compound interest on their side. That's the magic of compounding. It rewards those who start early, not those who start big. But saving for the future alone isn't enough. Imagine your house running on a single electrical wire. If that wire snaps, the whole house goes dark. That's exactly what happens when your entire financial system depends on one paycheck. This is goal number 8, building at least 2 reliable income streams, or multiple streams of income. You don't need to start a huge business, a side hustle, freelance work, online teaching, or investment income. The start can be small. Once you have 2 income streams, fear stops running your decisions, and options start showing up instead. Now we arrive at the goal that, without it, all the others start to weaken. Goal number 9, continuously investing in your financial education. Ask yourself, how much did you spend on streaming subscriptions last year? Now ask yourself, how much time did you actually spend learning about money? For most people, that second answer is embarrassingly small. But the truth is, your biggest asset is your brain. Tax laws change, investment strategies evolve, new opportunities appear. If your knowledge goes stale, your decisions go stale with it. People who are financially successful never stop learning. And now, let's talk about goal number 10, something almost nobody talks about in these videos, but it's absolutely critical if you live in America: your credit score. Most people think a credit score only matters when you're applying for a loan, but the truth is, it's not just a number, it's the gateway to your entire financial life. A strong credit score, above 750, gets you lower interest rates on loans, easier apartment approvals, and in some cases, it's even checked during job interviews. Picture 2 people trying to buy the same house, earning the exact same income. One has an 800 credit score, the other has 620. The first might get a 6% interest rate, the second could get 9%. Over a 30-year mortgage, that difference can cost hundreds of thousands of dollars just because of one number. Pay your bills on time every month, keep your credit utilization under 30%, and check your credit report for free once a year. This is the most underrated financial goal on this list, but its impact can outweigh all the other 9 combined. If you start working on these 10 goals one by one starting today, your entire financial life can look completely different in the next 10 to 15 years. In the beginning, the changes will feel small. Your bank balance won't look dramatically different overnight. But slowly your habits change, then your decisions change, then your results change, and eventually your entire life changes. Remember, the journey to becoming a millionaire doesn't start with $1 million. It starts with one good decision, then another, and those small decisions stacked together eventually become massive success. So today, grab a piece of paper and write down your 10 financial goals. Where do you stand right now? What needs to change in the next year? Where do you want to be in 5 years? And what kind of financial life do you want to be living before you turn 40? Because people without goals live according to circumstances, but people with clear goals slowly start building their own circumstances. Money never changes anyone's life overnight, but the right habits, the right mindset, and consistent good decisions absolutely will. If there's one thing you take away from this video, let it be this. Financial success is never the result of one big paycheck. It's the result of thousands of small, correct decisions that very few people actually stick with consistently. You may not have $1 million today, but if you have the willingness to learn, the discipline to stay consistent, and the habit of making the right decisions, trust me, you've already covered half the journey. If this video made you think even for a second, do one small thing. Hit that like button so it reaches more people who actually need to hear this. And if you want more videos like this to help you on your financial journey, make sure you're subscribed because we're just getting started here. Now I want to ask you something. Out of these 10 goals, which one feels the hardest for you right now? Is it building your emergency fund, fixing your credit score, or getting out of debt? Drop it in the comments below, because your comment might just help someone else going through the exact same struggle. And most importantly, tell me what topic you want the next video on. Drop it in the comments, or any other money topic that's been on your mind. Write it down, because the next video might just be built around your question. See you in the next video. Until then, give your money a direction, because that's where real financial freedom actually begins.